Welcome to Darasa Online. This is a program intended to help students to do revisions in accountants. So we'll have various topics that are covered in your syllabus on which we are going to make a thorough review and which will help students in preparation for examinations. So there will be a number displayed on your screen. Use that number to give comments and to ask questions. Also, you may use our website to have these materials for revision and for making follow-up. You may also use the website to give comments and ask questions. So our today's lesson will be on correction of accounting errors. Why correction of accounting errors? This is a very important topic in our lives because it almost touches our entire daily living activities in an organization. So there is accounting processes that are going on. And an accountant is likely to do errors. As the old saying says, to err or to do error is a human nature. And to rectify these errors is glory. So far, we know that whenever errors happens in accounts of an entity, need to be corrected. And this is one of the challenging topics in accountants, which challenges most of students in answering questions concerning correction of accounting errors. So in this topic, we have key learning objectives that you need to cover. And these objectives, as you cover them, it will help you to have the competencies that are intended in this subject or in this topic. So you are expected to be able to describe the types of errors not revealed by true balance. You are expected to be able to show journal and ledger accounts entries for the correction of errors which do not cause a true balance to disagree. You are expected to be able to identify errors which are revealed by true balance, and you are expected to be able to show journal and ledger accounts entries for the correction of errors that affects the true balance agreement. Also, you are expected to be able to explain the meaning and purpose of suspense account and to be able to correct errors through suspense account. You also required or expected to be able to prepare a revised true balance after correction of accounting errors. And finally, to be able to prepare a revised income statement and a statement of financial position after the correction of errors. These are the competencies that you need to have after studying or after going through this topic. By then, we are not going to do each and everything covered under this topic, but our revision will be concentrated on identification and the classification of errors, and also we are going to do some questions in correction of accounting errors. What do we mean by the term accounting error? As I said before, error are mistakes. So an error in accounting is a mistake or mistakes. So, and these mistakes are in the accounts of an entity. An error as a mistake may be intentional or non-intentional. So it is normal and usual practice in daily activities, an accountant may do an error in recording those transactions, and it may be either intentionally or non-intentionally. So with intentional mistakes or errors, so when an accountant do an intentional error, so he does those errors purposely for the aim of stealing or making fraud. But there is the other part of non-intentional mistakes or errors. With these non-intentional mistakes or errors are those mistakes the bookkeeper does because of poor knowledge of bookkeeping principles or carelessness in recording and additions in the books of account. So you do the mistake non-intentionally. It is only because you lack proper knowledge in principles of accounting or carelessness in recording. We need to know how errors are identified in accounting. So how errors are identified? Errors can be identified in various ways. So you may identify errors through customer complaints. As the customer complain, either debtors you have over debited the accounts, then as they complain, or creditors, it depends, but normally through customer complaints, you may get to know that there is errors. Also by means of trial balance. If you prepare your trial balance and it failed to balance, that you find there is imbalancing between the debit side and the credit side, then that will be an indication that there is errors. Either through audit work, after doing audit, you find that there is errors. It may also happen by chance discovery. You discover by chance those errors. As you go through those books, you find that there is an error made in the books. So this is how errors can be identified. So when can we identify these errors? So errors can be identified at any time, even after the trial balance being extracted, or after the financial statements have been prepared. Of course, this will be our area of concentration. We are going to see how we correct errors that are discovered after the trial balance being extracted, and also after the financial statements has been prepared. So after knowing how errors can be identified, let's go now to a part of classifying these errors. As we have seen that there is intentional and unintentional errors, but these errors are broadly categorized into two broad classifications. We have errors not revealed by trial balance and errors revealed by trial balance. So with errors that are not revealed by trial balance, so these errors do not affect the agreement of trial balance. Basically, if you prepare your trial balance, you find it is balancing. But those errors are still there because they did not affect the trial balance. How? Because they are not related to the error in double entry principle. But with errors revealed by trial balance, this error normally affects the agreement of trial balance. And basically, they affect the principle of double entry. If you record by either single entry, you fail to transfer to the corresponding account, you fail to complete the double entry system, then automatically there will be imbalancing in your trial balance. So these are the broad category of errors. And we know that when these errors are located or have been detected, they need to be rectified. And the rectification, as I said before, it may be after the trial balance being extracted, but before the financial statements are prepared, or after the financial statements are prepared by using an rectified trial balance. So far, this part will be covered in the next lesson. For today, we are going to see a question or some questions that involve identifying, classification, and correcting those errors just before the financial statements are prepared. Basically, we need to know the procedures now of rectifying. What are the procedures in rectifying these errors? So in rectifying errors, we need to ask ourselves 3 basic questions. The first one being, what has actually been done? And this is the error. So you need to know what has actually been done. What was the real error? And secondly, you need to ask yourself, what should have been done? How was it supposed to be done? This is the correct entry or the journal entry that should have been made in the books. Then after knowing what has actually been done and how it was supposed to be done, then you need to ask yourself, what should now be done to settle the matter right? And this is a rectification of entry, rectifying entry, or a rectification journal entry that will help now to solve or to clear the mistake. So we know that in accounting, errors are not erased or crossed. When errors are discovered in the books, they need to be rectified by means of journal entries. So don't erase or cross the error. And correction must be done through journal and followed by double entry in the accounts concerned. Why this? This is just to maintain transparency and accountability, and this is the accounting profession. So let's now just highlight a little bit the challenges. As I said, this topic challenges most of students. What are these challenges that facing students in this topic? So we know that the main problem for most of students is lack of or inadequate knowledge of principles of accounts. Why inadequate knowledge in the principles of account? So principles of account are classified into 2 categories. We have concepts that guides us in recording transactions. If you know these accounting concepts, you will be able to know how to record various transactions in books of account. But the other category of principle that are conversions. The conversions helps us in reporting in the financial statements. And sometimes these 2 terms, concept and the conversions, are used synonymously. But if you are aware of the concepts and conversions, and you know how they are applied in accountants, then it will be easy to know the nature of each transaction and how it was supposed to be effected. But we have also a problem in lack of proper knowledge of classification of accounts. So we know that accounts are classified into 2 also broad categories. We have personal accounts and impersonal accounts. With the personal accounts where we have debtors and creditor, and normally debtors have debit balance and creditors have credit balance. So with impersonal accounts, we have real and the nominal account. With real account is account for assets. And all assets have debit balance. While in the nominal, of course, we'll have expenses or expenditure accounts and revenue accounts. With the expenses or expenditure accounts, all expenses have debit balance, and on the revenue or revenue, including liabilities, have credit balance. If you know this classification of accounts, you know basically each account how it's supposed to be affected in recording. But the third challenge that you face as students in answering correction of errors questions, failure to identify the accounts or the account affected by each error or by errors, because you may find there are some transactions containing more than one error. If you fail to identify the accounts or how this error affected the accounts, then automatically it will be not easy for you to tackle questions. But basically, if you are aware of principles and the classification of accounts, then it will be easier for you now to be able to identify accounts that are affected by the errors, because you know the principles and you know how to classify these accounts. As I said previously, errors are classified broadly into two categories: that errors not revealed by true balance and errors that are revealed by true balance. Let us now look on this question. Even though the total debit entries and total credit entries in the true balance may be equal, we cannot assume that the books are free of errors. Part A, justify the above statements and name 6 possible errors and explain why they are not disclosed by the true balance. Of course, this type of question may be included in your exam as a written question. So it requires you a knowledge of how to write. And basically, it requires you to justify this statement that even though the total debit entry, that if you go to your true balance, your debit entries balances with the credit entries. So definitely we could assume that all accounts are properly prepared and reported in the true balance. Then this does not justify that there is no errors. And automatically, if you refer to the classification, this will be now specifically concerning with errors that do not affect the agreement of true balance. So how will you justify? You need to know what causes the true balance to agree or to balance, and still yet there is errors. Then after explaining this, you need also the part B will be requiring you to explain these 6 possible errors, of which now I'm going soon just to explain them. So let us now see this classification and quickly. So if you use these concepts, you will be able to answer clearly the question that is shown, this question. As I said, we have 2 broad categories of errors. That errors not revealed by true balance, and this error does not affect the agreement of true balance. They include error of omission, errors of commission, errors of principal, compensating errors, errors of original entry, and complete reversal of entry. These are the 6 errors that whenever they happen, they do not cause the true balance to disagree. The true balance will balance, and still yet these errors will be in the books of account. Let's start with the error errors of omission. Errors of omission happens when a transaction is completely omitted or not recorded from the books. So if you go back to ask those 3 questions, then you will find that what has been done in the books, no entry has been done. How was it supposed to be done? So it depends on the nature of the transaction. For example, a cash payment of TZS 16,000 for rent has been omitted from the books. So how was it supposed to be done? That was a cash payment. We are supposed to debit rent expense and credit cash account to recognize the cash outflow. So if it was not recorded, what to do to put the matter right? Then make the double entry to record the transaction. Let me show by illustration with the journal. This is our journal. Entries. We have debit balance with TZS. We have credit side. This debit side, credit side. TZS for credit balances. So our question says it was a cash payment of TZS 16,000 for rent has been omitted from the books. From the books, that means that it was not recorded completely. So we record it. We debit rent expense, $16,000. We credit cash account, 16,000. So remember to put the narration, because journal should be narrated. Let's go to the second error, that is errors of commission. With errors of commission, these occur when the correct figure or amount is entered, but in the wrong personal account. So it may be also an entry posted to the wrong account, but should be of the same category. How? If it is an entry to customer account, you sell the goods on credit to customer A. But instead of recording this entry to customer A, you record it to customer B. Automatically, you observe the double entry. So in the sales to be entered correctly, but in individual customer's account, you'll have overstated the entry in customer B, and you have not recorded this entry to customer A that was a real customer. So the error is with the customer A and customer B. So the correction will involve the 2 accounts, but in the sales account, there will be no error. The same applied if it is, let's say, revenue account with another revenue account. It was maybe rent receivable. So instead of recording to rent receivable, you record it to commission received. So you'll have committed an errors of commission. So errors of commission normally, when happens, how to correct it? You cancel out the incorrect entry, then you record the correct entry. Let's see an example. It was a sales of TZS 150,000 to Fidelis, has been posted to Ferista, as I said. So we sold goods to Fidelis, but instead of recording to Fidelis, we recorded it to Ferista. So we recognized Ferista as our data for this transaction. But basically, our data is Fidelis. So we need to cancel out the entry in first account to record it to Fidelis. How to correct this? We cancel out the incorrect entry that we debited to Ferista. Now we credit Ferista, we debit Fidelis. Fidelis account by 150,000 to Ferista account by 150. So you put your narration. We go to the next item. This is errors of principle, as I said before. So lack of accounting principle is one of the challenging problems in accounting. Basically, how these errors of principle happens. Normally, when you record an item in wrong class of account, so this is you record an entry in wrong class of account. Basically, it is on two sides that when you record an item in wrong class of account, or you post it to an account but of the different category. Let's say it is asset and liability. Normally it goes with the expenses and the asset. But this should be of the same balance. If it is asset and expenses, asset has debit balance and expenses as debit balance. So if you do that mistake, constitutes to error of principle. You record it to wrong class of account, or you record to an account of different category, that constitutes errors of principle. How to correct this? So it is the same procedures as the errors of commission. You cancel out the incorrect entry, then you record the correct entry. Let's see an example. A repair to a vehicle, to vehicles amounting to 10,000 TZS has been posted to vehicle accounts. So it was an expenditure of 10,000 being posted to vehicle account. That means it was treated as a purchase for asset. So it was debited to vehicle accounts instead of being debited to motor vehicle repair. That is error of principle. How to correct it? We cancel out the wrong entry in vehicle account to recognize the expenditure or the expenses in motor vehicle repairs account. We debit motor vehicle repairs account by 10,000. We credit motor vehicle account 10,000. So remember to write the narration. We move to the next. That is errors of original entry. How errors of original entry happens. So normally errors of original entry is when the original figures is incorrectly entered, and yet the double entry is still observed using this incorrect figure. You enter wrong amount in both accounts. So this wrong amount is recorded in the books of original entry, or it may be a document such as an invoice was wrongly extracted and subsequently posted to the ledger accounts. Whenever you post a wrong amount in both two corresponding accounts that completes the double entry, then that error will constitute of errors of original entry. So normally these errors are corrected. How these errors are corrected through computing the difference and add to the account either understated and vice versa. If one account is understated, you add the difference. And for the account that is overstated, you deduct the difference. Let's see an example. A purchase of TZS 665 from paper manufacturers limited has been entered in the purchases journal and posted to the ledger as TZS 656. If you compare the two figures, 665 and 656, you find that the amount was understated. If you check the difference, it is 9. Understated by how much? By 9 TZS. So it was a purchase from paper manufacturers. So if it is a purchase, it was supposed to be debited in purchases account and credited to paper manufacturers, our creditor. So it was recorded in purchases journal. Purchases journal, our error is here in the purchases journal. If you record in the purchases journal, that means you recorded this figure both in the purchases account as well as in the paper manufacturers. So the entry was understated in both accounts. How to correct this? We compute the difference and we add it to the account understated. So the difference is 9. We debit our purchases account by 9. We credit paper manufacturer account by 9. So write the narration. What next? The next error is errors of complete reversal of entry. Why complete reversal of entry? So these errors occur where the correct accounts are used. If it is expenses account, let's say asset account, at the same account. Or if it is an expenses and revenue account, at the correct account. But the entry in each account shown on the wrong side of the account. So if you reverse the transaction, maybe let's say it was a cash payment, instead of for an expense, instead of debiting to expenditure account and credit to cash account, then you record it vice versa. Vice versa, you debit cash account and you credit expenditure account. That will be an error, constitute errors of complete reversal of entry. So how to correct this? Because you reversed the transaction, then you need to cancel out the wrong entry and then record the correct entry. Basically, you double the amount. The first entry will be a correcting entry, and the second entry will be, to recognize the correct entry. Let's see an example. A payment of TZS 700 to a creditor. It was a payment to Martin. That was our creditor Martin. Has been debited to the cash account and credited to Martin's account in error. So Martin's account was our creditor. So once we pay our creditors, we debit the accounts, and because it is a cash outflow, we're supposed to credit in our cash book. Instead, we debited in our cash book and credited to Martin. So how we correct it? First of all, we cancel out the incorrect entry by debiting Martin and crediting cash book. So we have cancelled the error. Then we need to record the correct entry by debiting again Martin and crediting cash account. So these constitute errors of complete reverse of entry, as I said, when the entry is recorded in wrong, side of account. So we debit Martin's account by how much? So we double, of course, 4,000. We credit cash account, it was a payment, to recognize the cash outflow, then you give narration to your journal. The last in this category is compensating errors. With this type of error, normally happens when or where errors cancel each other in the trial balance. How errors cancel each other in the trial balance? If you commit an error in the account with debit entry of the same amount, then you commit another error with accounts with credit entry or credit balance with the same amount, then in the trial balance, these two errors in debit side and credit side will cancel each other. So an error in the account with debit balance is compensated with another error in the account with the credit balance. Let's see here an illustration. Rent received TZS 340 is correctly debited to the cash account but posted to rent revenue account. So in the cash book, it was correctly posted, but posted to the rent revenue account as 350. So the error was on the revenue account, that it was overstated by 10. Rent revenue has credit balance. So to correct this, we need to debit rent revenue. We are told that similarly, wages paid. Wages has debit in nature. It was a payment of wages amounting to 590. Is correctly credited to the cash. It was a payment, so we credited in the cash account, but posted as 600 TZS to wages account. So the error is also done in the wages. Wages was overstated by 10. Likewise, a rent revenue, which is a revenue, was also overstated by 10. So if we overstate a revenue account and we overstate an expenditure account, so the trial balance will agree. And yet, there is error that we need to correct. How to correct this? If these accounts were overstated, we deduct in each account to put the balance to the correct figure. So we debit rent revenue by 10, and we credit wages account by 10. So you'll have adjusted your error. So as we have seen, these 6 errors constitute errors that do not affect the agreement of trial balance. So they are not detected through trial balance. And when happens, your trial balance will balance. So you need to trace it back either from source document or through audit work, or maybe through customer complaints. They complain that you have charged more in the accounts. But this will not be revealed by your trial balance agreement. Well, let us now go to the second category, that errors revealed by trial balance. With these errors, when happens, they affect the agreement of trial balance. So far, these are detected through trial balance. What causes imbalances in the trial balance? We say that errors which cause an imbalances in the trial balance affects only one account. So if the error affects only one account, so this class of errors requires only one entry again, either in the debit or credit side, to correct them. So they affect the trial balance. So they will affect only one account. In the other account, they will be entered correctly. So The other entry now will be in suspense account, will be made to suspense account to adhere to the double entry principles. Because if you make an error in this type, your trial balance will not balance. And automatically that difference in the trial balance will be taken to a suspense account, which we see here now. This suspense account, it is an imaginary or temporary account, normally opened, just for tallying the trial balance totals. If the total credit side of the trial balance is short, then the suspense account is credited. But if the debit side of the trial balance is short, then the suspense account is debited. So in such temporary account is closed later after discovering these errors and correcting them. So automatically your suspense account is going to eliminate. So these errors normally are of this nature. So errors that are revealed by trial balance are of the following natures. They include casting errors. When you are making total in an account, if you make an error in totaling, so we'll make your trial balance to disagree. We have carry forward errors and carrying forward balances to the next accounting period. So if you commit an error, then your trial balance won't balance. Posting errors in posting. So you take from one account or from journal to another account, you post a wrong entry. You have balancing error. In balancing, making total, you get a wrong balance. Then automatically your trial balance will not balance. Then forgetting to show the item in the trial balance. Automatically, if you fail or you forget to show the item in the trial balance, your trial balance will not balance. Let us see now a comprehensive illustration that will take us through both errors that do not affect the agreement of trial balance and errors that affect the agreement of trial balance. We are given this question. The following errors were discovered in the books of Mapitio on December 31st, 2018. The difference in the trial balance of TZS 26100 being the debit side exceeded by credit side. So the debit side was exceeded by credit side. So the difference has been entered in a suspense account since the final accounts were to be prepared urgently. On correcting these errors, the suspense account was eliminated. So these are the errors. Let us now open the suspense and press the difference. So we are told that debit side was exceeded, so our balance will be in debit side. Balance and the difference. BD. It was 26,100. So we go to the first error. The total purchases daybook had been undercasted by TZS 100. So if you undercast in totaling purchases daybook, so automatically the purchases account will have been undercasted by the same. So purchases account will have been undercasted by 10,000. So how to correct this? We correct it through journal. Let us create our journal here and correct the same. Okay, well, this is our journal. So we debit purchases account. How much? 10,000. We credit suspense. 10,000. Remember to write the narration and transfer to suspense. Suspense should be credited. We write here the corresponding account purchases 10,000. So the next item, it was TZS 7,600 for motor repairs, had been taken to motor van account. This is an error of principle. So it was an expenditure recorded as an asset account. So how to correct this? We clear the error in the motor van and recognize the motor repairs account. We debit motor repairs account how much? 6,000. We credit to motor van account 7,600. So this error does not affect our trial balance, so it has no entry in the suspense account. The third item is a check received from Fadhili. 3,900 had been debited in the cash book, but the double entry had not been completed. So we received a check from Fadhili, so it was a payment. Fadhili is our debtor for that particular case. So the entry was debited in the cash book, but the double entry had not been completed. So if the double entry was not completed, then this error caused the trial balance to disagree. So the double entry was supposed to be in the Fadhili account, and the Fadhili account was supposed to be credited. So if Fadhili account was supposed to be credited, then we credit his account and debit suspense account, because the other account was correctly recorded. So we debit suspense uh, 3,900. We credit Fadhili account 3,900. Remember to write the narration. These affect the suspense. Then we transfer by writing the corresponding account. Fadhili account 3,900. We move on. The fourth item, it is a return outward book had been overcasted by 5,000. If you overcast the return outward book, automatically the return outward account will have been overstated too. Return outward account has a credit nature, so these automatically will have been overcasted. So the corresponding account will be the suspense, because the error was only in one account. So if we credit return outward account, if we debit return outward account to correct the error, to reduce the error because it was overcasted, then the corresponding account will be suspense. So we debit return outward, returns outward account by 5,000. We credit to suspense account, as I said. It is 5,000. So you write the narration, transfer to suspense account, that is return outwards account, 5,000. Okay, the next item was a series of TZS 4,000 to Mukandara has been entered in the purchases daybook. If it is a sales to Mukandara, so and entered in the purchases daybook, that means this transaction was completely recognized as a purchase of goods for resale. So it was debited to purchases account and credited to Mukandara. Definitely Mukandara is our debtor, but was recognized as a creditor. So we need to make a correction to clear the error from the recognizing the creditor and to recognize him as debtor, definitely we are going to double the amount in the mkandara. Then the other account to be corrected will be the purchases account should be recognized. So by, if it was debited in the purchases account, then by crediting purchases, and then the other entry will be to recognize the sales. So we are going to debit in mkandara account by doubling the amount. The corresponding entry will be to sales account by 4,000 and purchases account by 4,000. So we debit mkandara account 8,000, crediting to sales account to recognize the to correct the error. Remember to put the narration. This error does not also affect the agreement of the trial balance. So it has nothing to do with our suspense. So we proceed. This is our journal. This is debit and this is credit. We proceed with the next item, that is item number 6. A purchase of chair from Happy Traders towards 3,500 had been entered in purchases book as 5,300. So this constitutes more than one error. Basically, it was a purchase of chair. That was an asset. It was entered as a normal purchase. That was the wrong entry first. So we need to recognize from the purchases account and recognize the asset. But at what amount? At 3,500. So we are supposed to debit furniture account and credit Happy Happy Traders by 3,500. But in fact, it was entered in the purchases account as what? 5,300. So we need first of all to recognize this error. If it was entered in the purchases account with this amount, we need to credit the purchases account by 5,300. So which account again should be debited? So the account that was supposed to be debited was the furniture account, but not with this amount. So we are going to check the difference. So the corresponding account will be the furniture account, but with the difference. And with the actual figure, that is 3,500. And the difference, that will be 1,800. Yes, we now have to be deduced in the Happy Traders, because if it is entered in the purchases account, also we have recognized Happy Traders as our creditor for the same amount, that is 5,300. So how to correct this? My dear students, we debit furniture account by 3,500, and then we credit purchases account by 5,300. So the difference now goes, as I said, 8,000. We go to, yes, to reduce the indebtedness to Happy Traders account. So then you'll have corrected your error. So this error also does not affect our trial balance agreement. So hence does not involve suspense. The last item was goods returned by Kinunda, 7,500. This has been entered in the return outward book. However, Kinunda's account is correctly posted. So it was a return inward, but entered in the return outward. So we need to recognize the return outward account by debiting it, and also recognizing the return outward by debiting it. So because the return outward and return inward are not corresponding account, then automatically the double entry will be to suspense. So this error, as I've said, what we do, we recognize the return inward and we recognize the return outward by debiting returns inward account. How much? 7,500, and debiting again returns outwards account by the same. So the correction entry will be to suspense account. If you add up you get how much? 15,000. Then so you narrate, you give narration. So you post it to the suspense account, that is return inwards 7,500, and then return outwards again 7,500. So if we are through with our errors, we need to total the suspense to eliminate it. This 26,100, you add 3,900, you get yes, 30,000. So this is 15 and this is 15, 30,000. So our trial balance has balanced and we have corrected our errors. So for today, let us end here. We have seen the classification, identification and classification of accounts. We have seen the two categories of errors that are not revealed by trial balance and errors that are revealed by trial balance. And we have seen how to identify and correct them. So the next lesson, we'll go a further step to see the effect of errors on profit and how we can prepare corrected statement of financial position. Continue giving comments back and continue asking questions through the number displayed, and on each lesson there will be a question that you will be given to do just as a homework. So do those questions and email us for any challenge. We are going to help you. Thank you. See you next session.